Good morning. This is Connor from 0DTE Traders here to present our market minute for December 21st, 2023. It is 10:30 and the SPX is trading higher, up 0.8% to 47.34. Big gap on the upside, and we ran into the implied high of 47.40 twice, rejection both times. So we're definitely at a tough juncture here. Internals are technically bullish. Volume difference, 8-to-1 ratio. NASDAQ, about a 1.5-to-1 ratio, both positive. And ADD is at plus 1,800, which we would deem a bullish extreme. So if this persists, the market could continue to stay bid and perhaps drift higher. If ADD starts to accelerate on the downside, that would be a good indication for a potential move lower. I think a big question mark here today is the VIX. Despite the move higher, volatility is staying bid, up 1%, just below the 14 handle. Obviously, VIX was an exacerbating factor yesterday in that sharp move down, about a 13% move trough to peak. So if volatility continues to move higher here, it will be an exacerbating factor. Conversely, if volatility contracts, it will provide some fuel to the upside. So I think in terms of direction here, which, we're kind of directionless, since the open, keep a close eye on ADD, VIX. They'll give us some telltale signs into where the market may be headed. Turning to our framework, the 4-hour trend is bullish. The 1-hour trend is bearish after breaking our flip yesterday, which was 47.50. And that's really where the downside momentum and the spike in volatility intensified. But since then, the flips have shifted lower to 47.10, 4700, meaning that this is our transitional strike. As long as the price holds above this zone, we remain in the buy the dip regime, although the market is more neutral than it is positive. To explain further, when we're in a positive gamma market and trading above our flip zone, dealers hedge via buying weakness and selling strength. This reduces volatility and supports the buy the dip trade. The higher the total market gamma, the stronger that buy the dip effect. Conversely, when you are in negative gamma and trading below the flip zone, dealers hedge via selling weakness and buying strength. And this increases volatility and often supports the sell the rip trade. The lower the total market gamma, the stronger that sell the rip effect. Now that's kind of an oversimplification, and we definitely do not want to trade that blindly. It is not a timing mechanism, and we must also take into account internals, volatility, as we have here today. But I think the question going forward here is this an anomaly, right? This neutral state? Are bulls going to reassert themselves? Positive gamma going to build? Or is this the start of a negative gamma regime?